One of the most fascinating companies in retail is Costco. The company really doesn't play the same game that most other retailers do. It doesn't price things the same way, it doesn't make the same gross margin, and that's because this is a membership business. If you look at Costco's business, they generate about as much in net income as they do from those membership fees. So that means everything else they do is effectively a break-even proposition. This is an extremely different model than competitors like Target or like Walmart. And so that's what I want to dig into today is exactly what the numbers look like for Costco and why this is such a differentiated company. They're just simply doing things differently than their competitors. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. Now let's go to a couple of charts because I think this shows the numbers really well. The first one I want to show is Costco's free cash flow and its membership fee revenue. The columns that you see are actually the membership fees. So going back to 2013 through 2016, membership fees were actually more than Costco's free cash flow. So they were actually losing money from a cash flow perspective on their core business. That changed a little bit over the last 6 or 7 years because we're starting to see the free cash flow and also net income, same trend, are more than those membership fees. But it's interesting to show that these track pretty closely. As membership fees go up, Costco gets more profitable. So what does that mean for the rest of the business? Because at the end of the day, you pay your membership fee for Costco, and then you still get access to a retailer. That's their core business. That's what they do as an operation. So, well, this is what some of those numbers look like. This is the gross margin for Costco, Target, and Walmart. So 3 of the biggest retailers in the country, most valuable retailers in the country. And what gross margin is measuring is how much money do you make when you sell an item? So what is revenue for a gallon of milk? How much does that gallon of milk cost you? You have the cost to run an actual store in there. So the employees of the store, stocking shelves, things like that. And then that is the gross profit. It does not include any advertising, any general and administrative, so corporate offices, accounting functions, things like that. Those are operating costs. So this is just comparing the gross margins for these companies. And you can see that Costco's gross margins are between 12 and 13.5%, whereas Target's margins typically are closer to 30%, and Walmart's margins are around 25%. So what you're seeing here is the fact that Costco doesn't need to make money on its store operations so it can lower prices. This is like a flywheel for Costco. They can lower prices to basically break even in their stores. They even sell in bulk so that you get an even lower price on a unit basis. That attracts more customers who are willing to pay for that membership fee. That means there's more revenue and margin flowing through each one of their stores, which means they can lower prices even further. And that's how you get this massive differentiation. The cost to operate the store, to pay employees, all of those fixed costs that go into that gross margin gets spread across so much more revenue than it does at a lot of these other retailers because of this business model and the way that it's built. The fact that Costco can continue to lower prices to operate their stores at break even because they're making almost all of their money on these membership fees. So this is ultimately the company's differentiation. And I think it's ultimately something that is very sustainable and is going to continue to drive the company's growth. Now, does it make the stock a buy? That's what I want to get to next. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The challenge for Costco is always, what are you going to pay for the stock? And right now, this stock is absolutely not cheap. I'm going to go through a few of the multiples and then show some of the growth rates as well, because that's the context with which we need to look at the stock. So right now, Costco's price to earnings multiple is 38.5. Forward price to earnings multiple, so that's based on analyst estimates for next year, the multiple is 34.5. So not expecting a huge improvement in profitability next year. And that's consistent with what we've seen with Costco in the past. The compound annual growth rate for net income over the past 10 years is just 13.2%. That's a very solid growth rate but paying 35 times earnings for that kind of growth rate is very, very expensive. Free cash flow has also grown 14.5% over the past decade. So again, very expensive multiple. Let's look at those multiples compared to some of Costco's competitors. I'm going to start with Target. Target's price to earnings multiple is 17.2, and on a forward basis, the multiple is 14.5. So less than half of the price to earnings multiple that Costco is trading for. And I want to put a couple of caveats on that because Target is still at a little bit of a down point. They had some problems adjusting to the merchandise that they actually had in store in mid 2022. And it takes a long time for that to flow through the system. So when you look at something like compound annual growth rate for cash flows, that's actually negative 2.4% over the past decade. And net income is up 6.5% over the past decade on a compound annual growth rate. But if we look at just between 2014 and 2022, the net income compound annual growth rate goes up to 17%. So you have this kind of weak last year for Target. So we'll see where that adjusts. I think their ultimate profitability, both free cash flow and net income, is probably a little bit higher than it is today. So much better from a valuation perspective, but you're not quite getting the same growth that you get for Costco. So that's the trade-off there. At Walmart, you see something similar. A little bit better valuation than Costco, although not as cheap as Target. Price to earnings multiple is 25.6. Forward PE is 22.6. So relatively expensive, especially when you look at this growth rate. Over the past decade, free cash flow has grown at a compound annual growth rate of 2.3%. Net income compound annual growth rate 0.2%. So basically flat. So Walmart is basically not growing on the bottom line or from a free cash flow perspective. And you can see there's some volatility there in those charts, but not quite the same weakness in just the last 12 to 18 months that you saw at Target. So I think we're probably at a little bit more of a normalized level. The other thing to mention from an investment perspective is the dividend. Costco's dividend just 0.75%. Target has a dividend of 3.3%, and Walmart has a dividend of 1.5%. So the dividend yield is a little bit different there. Costco is still investing a lot of their money in building out new stores and growing that footprint. So again, these retailers are a little bit different from a payout perspective if that's something that you value as an investor. This is the balance between all of these retailers. Is what are they all worth? Is Costco worth a premium compared to Target and Walmart? Absolutely. I think that is without a doubt the case. It has a differentiated business model. And that's what I talked about, that Target and Walmart are basically playing the same business model. You don't have to pay to get in the door in these retailers. And then the struggle is to make enough money and make enough gross margin on every product that you sell that you can cover the operating costs for the stores and the operating expenses for the business overall and have some profitability left over. Costco doesn't have to do that. They can basically break even on every single one of their stores. And that means they can have lower prices, which attracts more customers and lowers prices further because they're making all of their money on those membership fees. So very different business model and potentially makes this one of the more sustainable retailers or big box retailers in the US today. So I think this is a fascinating look at how business models really impact retail and why Costco is really a cut above the rest right now. I think it's a very expensive stock. I would love to get it at a much lower price to earnings multiple, but there's obviously a reason that it's trading where it is today. So what do you think about Costco? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.